Hello all. This form has been filled out by one of the students and he has filled it out correctly. What I like is that he has not written his social security here. He has put in correctly, 1, 2, 3, 4, 5, 6, 9, and has put a, imaginary address here, which is correct, and an imaginary zip code. And of course, when you file for your taxes with the IRS, you can, you have to, put the correct things. And then this employee, this person is a single. And therefore, if this person was married, he could push this one, married, and then they wanted to use the same form together, they could click in here. Or if he was married and his wife was going to, fill out separately, he could click here. And then he could be head of the household. Head of the household is someone, suppose, if he was taking care of, for example, his father, and he was paying a lot of, half of the, expenses of his father, he could put a check mark here and get some deductions, and then what he is trying to say is that they are asking him if he was involved in sold any digital assets like Bitcoin, he's saying no. The reason IRS wants to know is that Bitcoin can be transferred or sold in such a way that the IRS and the banks won't find out at all because it won't go through the banking system. Therefore, the IRS wants to make sure the people who made money, in Bitcoin, are clear. Did they make money or not? He's saying no, he didn't have any transactions for, digital assets. Therefore, and also he is going to come here. He doesn't have any children. If he had, and he had to provide them maybe their social security number, that way he could get some deductions from the deductions from his taxes, but he doesn't have. Therefore, that's that one. Then he came here and he said last year in 2023 he made $45,000. Imagine he worked for Eastern College and Eastern College gave him a paycheck, and he got this one from his W-2 form. In the W-2 form, it's written federal, taxes, federal, total income, and that is what he made last year. Then you get it from W-2 form. You all have it. I sent you a sample. You will see that. Then what he's saying that he is claiming that he didn't have household employee wages not reported on W-2 because sometimes he might have made some money from other things. So imagine that he might have cut the grass of the neighbor and the neighbor gave him $200. Therefore, he is saying that he didn't have any income. And other incomes, he didn't work as a waitress or as a waiter and didn't have any tip, and then he didn't have any other income coming to him, and then he has put zero here. If you don't understand what these are, just put them in ChatGPT, and as you see, I have ChatGPT here, and very easily I can go there and ask ChatGPT what is employer provided adoption benefit, and then if he had some, employee benefits for some adoption, then he had to fill out another form, which is called 883, and he had to look at line 29, and he had to attach it to this form. This form is the simplest one that we are filling out because these are only 2 pages. But some people have complicated, tax form, but for him is a simple, tax form. Then we come here, and then he is telling that he didn't have any tax exempt interest, qualified dividend. He didn't have any stocks, of the companies. When you have stocks, the stocks give you, some profits. They deposit it in your checking account or maybe, in your brokerage account. He didn't have any. And then he's not retired, and he didn't get anything from individual retirement account. If he did, he had to put it here, and his income would have gone above $45,000. Pension and annuities, that means he's not retired, and the employer, which is Eastern College, doesn't give him anything, any kind of retirement money. and therefore he has the only extra income he is an honest person. For example, he gave $5,000 to his friend, and then his friend borrowed and paid him 10% interest. 10% of $50,000 is $500. That's an income he has. Therefore, he is an honest person. He is telling IRS that not only he gave $45,000 from the Eastern College, he got $500 in interest. Then he has another income here. Capital gain. You know what capital gain was? Imagine that he bought the land for 10,000 and he sold it for 12,000. Therefore, he had a capital gain of $2,000 profit on the land he made. Therefore, the total taxable money that he has is 47,000. That comes from 45,000 here, 500 here, and 2,000, $47,500. Therefore, that is the number that you see here. Now, the federal government always gives you a discount. By saying discount is that they say, okay, do you see here is written, if you are a single person, the government is going to give you 13,850 in 2023, which is the discount he is putting it here. And then when he subtracts discount from here, this is the number that is called taxable income. That means that if the government had not given him discount of 13,850, he had to pay taxes on $47,500. But because that discount, which is a standard deduction, this is what he has to pay taxes on. And now, because he is single, he's filing as a single, he writes 33,650. If it was a joint filing with his wife, for example, he could get 27,700 discount. Do you see? He would have put here, because there are two people here now. They are jointly wife and husband filling out. And of course, if there was a wife, the wife had to add her salary also to this one as well. But for now, you understand. Now he has to pay taxes on 33,650. What he has done, he has gone to the tax table to see how much taxes on 33,650 is. I gave you the tax table, and he came here 3650, and here is, I think, 33, is right here, 33,650, which is, he sees, do you see 33,650 is here? He looked at this number here, and he saw the number. This number is for single, and this is maybe joint, and therefore they have to pay joint taxes. But for him, because he's single, he put his taxes is he has to pay 3,821. Therefore he came here and wrote 3,821 here, and that is how much he has to pay. But what Eastern College has done on her W-2 form, when he looks at it, it is written on that W-2 form that the federal taxes that Eastern College is holding from his paycheck is $4,500, which means this poor guy was supposed to, pay only 3,821, but Eastern College deducted more from his paycheck, $4,500. Therefore, the IRS has to return him the extra money. The extra money that the IRS has to pay, he comes and says 4,500 minus 3,800, which is $679, is that the IRS has to pay to him. And what he has done, he is giving the IRS his checking account number, which is 1234. You may use these numbers. I'm happy that he didn't write his checking account number, actual one here, because this is on the internet. And then he has marked here, checking. And then, of course, when he comes here to real filing, he has to sign here, dated and occupation. For example, he can say that I am an employee of Eastern College, secretary at Eastern College. If it is a joint filing, the wife has to sign here as well. And as you see, and then if it is a preparer, someone helping him, he has to write, the preparer has to write his name or her name here. Therefore, he has done everything correctly. Therefore, you can go and, you can write whatever you want to do. And for now, this is a simple tax form, and he has done it correctly. Therefore, I sent a sample, W-2 form. You can use that one, and you can make up the numbers. Do you see he has made up this 45,000 here, this 500, he has made it up. If you can, want to add some numbers on your own discretion, you may. Then you will look at the tax table to see how much your taxes are. And then, of course, he has to print this one if he wants to mail it, manually. And there is an address, which I will show you where it is, they call it where to file IRS. And then where to file, Google, and the people in West Virginia will be given an address. The people who are expecting to receive money, which in this case he is expecting to receive the money. If he owed the money, imagine his taxes are 3821. If he had paid only 3,000, he would have owed. He had to pay $821, to IRS. In that case, he didn't. He could put his checking account and tell the IRS to deduct it, and then of course then it was another case. Therefore, I want you to see it's okay if in this case he's a lucky person because he's getting a check back. And then, some people might owe money to IRS, which is pretty all right if you owe on money, but if you owe significant, you don't want to owe significantly. But I want you to, for now, just know about it. If you have any questions, let me know.